Let's now come to the Ask Weekend Investing round where we take up queries and try to answer them. So let's start. All the previous rounds of Ask Weekend Investing, 749 queries are already recorded and uploaded. So you can watch these videos and get your queries solved. Perhaps most of the queries ever would have been asked and answered. And of course, please do subscribe to the channel. We will never charge you for this channel for sure. And do like and share these videos. So question number 750 is from Satish. Why do we not see absolute momentum strategies in the large cap space? I would like the cash mechanism there too. Cash offers a lot of peace like in MI50. So no particular reason as such, Satish. We have some strategies which are not labeled as large cap, but which, you know, perhaps are exposed mostly to large caps, and MI ATH is one of them. And even in MI MT all cap, you will see a good amount of exposure to only large caps. Yes, a pure large cap strategy going to cash is missing from our basket of offerings, and we will certainly look at that in the future. Kumar has the next one. I once remember you stating that one can also consider gold for foreign or non-India exposure. I don't see US equity being able to outperform gold INR, and also not to forget the hedge that gold provides. So can I simply opt for gold INR in place of my foreign stocks? Yes, in my view, if you are having Indian equity and if you are exposed to gold in INR terms, I think that's a good enough hedge for all kinds of purposes. The gold will give you the dollar denominated returns and will provide you with negatively correlated performance of gold INR to your INR equity. US equity perhaps is a bit uncorrelated to some extent to these two. So it could be a third component, but even if it is not there, I think these two are more than good enough as far as I can understand this. Ayush says, how long does it usually take to tune your mind to be okay with high loser percentages in momentum style? At the end of the day, only performance can nail down faith in any investing style. How did you deal with this at the start of your momentum journey? So my sense on this would be that I got fed up of losing money after every market cycle. I would make a lot of money and then I would lose it most of it. Then I would make and lose most of it, and hence I was looking for getting into a style where I'm okay with losing some of it, but not all of it, and also to go to a style where I don't have to make the decision. The strategy makes the decision so that I don't blame myself, I don't have regrets, and I'm not fine tuning the system, or I'm not looking for a new strategy at every time, because every time you lose, you will tend to question, why did I lose? Whereas in this very structured style of investing, it is known ahead that you are going to have 50 to 60% of your trades going into losses, and the other 40 to 50% are going to go into winning trades, but those winning trades are likely to have much larger winnings than the losing. So that math, once you are able to understand and accept it, and then of course you will need to have at least some success, some upswing in your favor for 6 months, 12 months, to really understand and experience it. Then you will be able to tune your mind that yes, it is only a matter of time that we get another upswing and I will make some new winners once again, and I only have to pass time till then by having these smaller losses. So my sense was that, don't, for myself I can say, don't try to be in both the boats where you are trying another style of investing while you're also doing momentum, because in your mind it will clash. The two styles will clash. On one side you are saying I want to get out because maybe a 5-10% loss is there in your position. On in the other style, it is inviting you to take more position as the stock comes down. So there is a huge mental battle that happens, and for those who are not very disciplined, what essentially they will do is, the losers of momentum will become investing stocks in their other portfolio, and they will keep it till they recover their money, and that will really mess up the entire thing. So set aside some money. Let's say you have, let's say, 10 lakhs. You set aside 2 or 3 lakhs and let momentum run on that. Once you have confidence on that, then you put in more money. Most of our clients have told us that they tried momentum for some time, and once they were able to see the benefits, then they were able to bring in money from their other parts to momentum. And there are many clients now who only do momentum. They have full 100% faith on the style, and they're not worried in downtrends, that we are not making money right now. In downtrends, nobody is making money. So this entire, myth or fud that, momentum doesn't work in downtrend, nothing works in a downtrend. At least you have sure short exit plans in place. You will not be left bleeding on the road. That part is certainly taken care of. And because you are not in a deep drawdown, your build back up whenever the next cycle starts is also very quick. So it is a matter of conditioning your mind towards it, and it can be done by allocating a smaller percentage to start with, and then gradually going up. Vivek has the next one. You have talked about momentum aiming to capture only a portion of the overall trend in a stock or a sector. In your experience, how much of a delay one can expect both at entry and exit? I'm asking this to ensure these expectations are right and there is no FOMO next time. So when the stock or sector takes off, it will depend upon how it is taking off to make sure that stock rises in its momentum score and it becomes at the top of the table where it is going to get picked, and similarly when it exits. So there is no metric that I can give you that how much delay one can see. But if a stock has been more consistently going up, it will come into your picks earlier. If the stock has been very flat and it starts to rocket up like this, there can be more delays when that happens. And I would think don't uh, put too much of emphasis on this whether I'm getting delayed or getting at entry or exit. Just follow the strategy, and over a period of time, in some cycles you will make much more than the market, in some cycles you may make just about market, in some cycles you may even lose. But over a significant period of time, hopefully you would not bleed too much at any point of time, and that the cumulative compounding action will take place, and you will be able to get to the desired outcome. Ayush says, how does one decide on selling a stock that is losing momentum from a point of great strength? So again, it will depend upon the strategy. Let's say a strategy is designed so that it will exit stocks if the stock drops 20% from its peak. Let's say that was the rule. Then as soon as the stock starts to drop and it breaches your exit point, you're exiting. Let's say another strategy is there where it says, I'll stay in the top 20 stocks with last 1 year of rate of change, and I'm going to review it weekly. So any time after a weekly review, if the stock drops to, let's say, 21st position or 25th position or 30th position, whatever may be the cutoff, it will get out. So exit exit could be very very different. I mean, somebody may incorporate a super trend or a ATR or a moving average also, that if a stock drops below 20-week moving average, I'm going to get out. Stocks drop below 200-day moving average, I will get out. Or a combination of these things is also possible. So whatever be the rule, as long as you are sticking to the rule and not trying to sort of avoid that rule when it does click, I think that is the main thing. That can you stick to the rules in a military like fashion? When your system says buy, you're buying. When your system says sell, you're selling. That is more important than where it is selling or where it is buying or how much it is selling. I think that part is important but not so important. But the main thing is the discipline, that can you allow your winners to run, and can you allow your losers to exit quickly without battling an eyelid. That I think is the main thing. Arun says, in case USD loses its hegemony and depreciates by 30%, what will happen to gold prices in the US? I think gold prices will rocket. Gold is a completely antidote to the US dollar. Uh, Central banks are accumulating gold for this particular outcome. And impact on rupee terms is difficult to say, because how the US dollar and INR ratio will uh, behave once USD starts to lose is something to be seen. I I feel that because we are also running a reasonably large fiscal deficit, I don't think the rupee appreciates too much against the dollar, even if the USD is losing its hegemony. Like in the 70s when US was devalued versus Japanese yen and Swiss franc, etc. At that point of time, also it was not really, INR was not appreciating against the US dollar. So maybe some impact can be there, but more likely is that there is going to be pressure on the rupee also to remain not so strong for the exports to not get hit. So I think the control of RBI that is there on the USD INR will not allow it to appreciate too much, even if naturally it were to go that way. So my sense is that if USD is declining, gold prices in dollar terms as well as rupee terms should hit the roof. Raghu says, I want to invest 10 to 20 lakhs in MI20 small case. Do I start with minimum investment amount and do SIP with the minimum investment amount, or do we SIP with the prescribed amount to maintain weights? If not SIP, should I do lump sum when markets are moving up or when markets are moving down? So I would suggest that you start with, let's say, the minimum recommended, which is 2 to 5 lakhs, and then do invest more from time to time. Perhaps if you want to time it when markets are starting to move up, you could add more, or when the markets are in deep down corrections, 10-15% down, that is also a good time to add more. So again, there's no one right answer that I can give you with this, but start with a reasonable capital and then add perhaps every month, every 3 months, to that, to make sure that you are adding at different points. Syed says, can one switch from one of the weekend investing's momentum model to another before the expiry of subscription? So typically, I mean, it's difficult to do this, but if you are, really pressed to move from one to the other, you can let our support team know, and we will try to facilitate this. Ramakant says, I've invested in MI20. What is the process to protect downside when markets are going to red? Is it careful picking to maintain 20 stocks or go into cash mode? So MI20 does not go to cash. It is designed to mimic the small and mid cap 400 index. And just like the index will also go down and come up, MI20 will also go down and come up. So as long as you are invested in it, you are doing all the rebalances. The idea is that over a period of time, it beats the index. That's what the whole thesis is. So if you don't want to add any additional layer of protection, that is also fine. But if you want to add another layer of protection to it, perhaps going into cash when small and mid caps go down could work. But then again, that is not a part of the strategy. The strategy is to mimic the index and try to find the strength within the index. The second question is, does my subscription continue if I exit small case and then come back after a few days, or have to resubscribe? So as long as, let's say you've taken a subscription for 1 year, and if you exit small case investment after 2 months or 4 months, and then you come back after the 6 months and start again, that is fine. There is no issue at all. You subscribe to the strategy for a year. We are bound to service you for that 1 year. Whether you invest or not is your decision. At any point of time, you can exit or come back. That's totally fine. No issues at all. So this is the end of the Ask Weekend Investing round. Do ask your queries in the comments, and we'll take it up next time if this was not this if this time we have missed it. All the previous episodes are here in case you wish to go through them again. And do of course subscribe to the channel. And thank you so much for watching. I'll see you next week. Bye.